Good afternoon. Yes, welcome back to my channel. It is me, Kadero Hudson, the wingman. I am here to deliver that delicious sauce. Yes, your boy got a haircut, got my beard trimmed up, so we here to deliver that wonderful content. Got the watch on, got my Phi Beta Sigma wristband. Holla at your boy, Blue Phi. But we are here to talk about dividend investing. Come on now. We always talk about dividend portfolio update, dividend investing. You guys already know. Listen, this is the road to 100K. I've been diligently diligent in regards to my investing portfolio, in regards to just compounding my wealth, compounding these gains because I'm trying to hit this 100K. But I'm also planning my trip to Brazil. And as you see in my spreadsheet, that I'll be going to Brazil, Rio de Janeiro in May. And so my trip is fully paid for finally. I just got paid my incentive today. And so I plan on dropping set of 1,500 into the stock market. I'm going to drop at least 2,000 into the stock market. So we're going to go into detail right now. But this is exciting. This is my portfolio as of 3:04 Eastern Standard Time, $54,968. So roughly, let's say put add an extra 40. That put me closer to my goal of 55,000. A portfolio of 55,000. That means I am a little halfway close to my goal of reaching 100K in this dividend growth portfolio. And then from there, the gains is going to be epic, bro. The gains is epic. What you see right here is that I'll go through in my this is simply safe dividends right here, but secret alphas, and basically we'll seek an alpha, and we'll go through the stocks that's really propelling my portfolio. I just recently added Zoetis. It's a uh, deals with like pets and livestock. It's a healthcare company, and over the past, let's say, 6 to 8 years, Zoetis has been really been beating the market, and it's a low yielder, but man, and this is a great opportunity, a great stock to buy if you're looking for a healthcare company that's compounding gains. Zoetis, boom. My Williams Sonoma has been crushing it. I've actually added VU, the S&P 500, to my portfolio so that I can compound my gains. Again, my goal in investing is I have multiple portfolios. I have a dividend growth portfolio, which is this. So let's show you this real quick for that. The goal is for me to compound my different portfolios so that I can at least have between 500,000 to roughly 900,000 by age 50, so that I can eventually sell my house and then live abroad, whether it's Brazil, Philippines. That is my goal. I'm at 35 right now. And so I need compounders that's going to grow fast. And I'm also contributing roughly $1,000 per month. And this is what I have right here. So next week, I get paid next week, next week Friday. So today I received my incentive, and with my incentive, I've bought uh, the mobile Wi-Fi for my Rio Brazil trip. $265 on just roughly swimming trunks and things that I needed. So then also Walmart and some last things like mints and everything. And then I also converted $551 into Brazilian reais. And so that's what I did right there. But all what's left I need to do is that I need to buy uh, some American Express and also some Bitcoin. So next week, aside of my investments into Bitcoin, uh, American Express, and also I'm thinking maybe another 250 in Texas Roadhouse. That's from my incentive money, and then I'm also going to be adding like $500 for my incentive money, and then $1,500 from my regular budget for March, and I'm going to split amongst here $200 into Microsft, $200 to Aapl, some money into Aflac, Texas Roadhouse, Williams Sonoma, Caterpillar, Cullen Frost Bank. This is my income play, and a lot of people don't have Cullen Frost in their dividend portfolio, which is cracking. Also, gonna add $200 into Costco. I saw that Costco recently they have hit their goal in regards to the estimates in regards to cost per share, but it's still they missed on like point something, whatever, something small. So the stock is down a little bit at like maybe roughly $750 or whatnot. So I'm gonna dump $200 into Costco, and then right here I'm gonna add $100 into American Express right here, and then 250. So $350 into American Express all together. $75 into Vu, 125 into Zoetis, which is uh, that healthcare company, and then $100 into brokerage. That's what I plan on doing. And so the reason why you guys are here is for a dividend portfolio update. That's stocks that I recently bought from the last time I did a video up until now. So what you'll see is that since I have have low yielding stocks, my dividend income for right now for this year is going to be a lot smaller. But next year, I plan on contributing more into more high yielding stocks like Enbridge, Mo, um, Owl Rock Capital. That's what I have planned in my structure to buy next year in 2025. But this year, I'm setting the foundation for my low yielding stocks so that I can uh, have my portfolio to compound more than 10%. Because right now, my portfolio is compounding roughly 15 to 60% per year, which is outstanding. And then but my other portfolios, which lean heavily more so on tech, they've been compounding like uh, my traditional IRA is up 24%. The SP 500 right now is only up. Like I'm saying, only it's only up like around 7 to 8%. My uh, traditional IRA, which has Nvidia, which has Costco, KLAC, and Centos, and many other semiconductor stocks, that portfolio is up 24%. Now, mind you, if the S&P 500 is up 7% and that portfolio is up 24%, that's up three times. And then my Roth IRA, it's blended between income and uh, land research, et cetera, right? Uh, so what you see here is that for the month of February, I received, and the reason why I'm going off of May because February is gone, and so the next chronological order, March is what the dividends I will be getting paid this month, and so it goes every 3 months. So we go off of May, which will be what the dividends I received in February. I had received $10 from Aapl. I had received $5 from Accenture. That's a tech company, tech play for American Express. Since it's a low yielding stock, I'm still buying it. I'm going to receive $1.89. I'm going to receive $6.52 in Caterpillar. I'm heavily invested into Caterpillar because I'm in the construction industry. So I work as HR in the construction industry, more so in strategic planning and strategic investing, and also strategic management. And so I'm heavily invested into just the construction industry, and Caterpillar is my play. Before, I would say 5 to 8 years ago, Caterpillar was more so it was a income slash dividend growth company. But right now, I don't know what's been going on, but Caterpillar is on fire, and it used to be on like 2.5%. Like 6 years ago. Now, as you look at the dividend yield, it's like roughly 1.5, meaning that the stock is growing a lot faster than the dividend growth, which is great because that means the company is profitable, the company is growing. So I'm not complaining. Costco was also a low yielding stock under 1%, was a big compounder. It's going to pay me, it paid me $1.36. And then realty income pays on the 15th of every month, pays me $10.33 for owning it, which is love. And then last is Williams Sonoma, which is consumer discretionary. Uh, Furniture and like Pottery Barn and stuff like that. So for the month of February, I received $39.64. Let's round up of $40. Not bad, not bad. But the bread and butter is that uh, my portfolio is growing, as you see right here. Today is a lower day, and the reason why my portfolio is high, and so let's go to positives. The positives is that Broadcom right here. Let's go through my holdings real quick. I'm not gonna make this video a long video, but Broadcom, which is a semiconductor stock, is carrying my portfolio. I would love to buy more Broadcom, but I also would like for Broadcom to do a stock split, because one share of Broadcom is $1,318. Yesterday it was in the green, and it was like a bull run, whereas the whole stock market was in the green, was in a positive. It was roughly at $1,400 per share, which is a lot. It's a lot. Also, the other stock that's carrying my portfolio is Microsoft. I have 25 shares of Microsoft. As you see, as you saw in my right here, I'm buying roughly $200 worth of Microsoft and $200 worth of Apple per month. So Microsoft is carrying my portfolio. But the reason why my portfolio is not in the 55,000 range, which it was, is that uh, Apple is having a rough time this year. It's Why the S&P 500 is up, while semiconductors up, AMD, Nvidia, et cetera. Apple is having a rough time, but at the same time, I believe in Apple. I believe in Apple. So I would say a month ago, Apple was around 105, 185, $186 range, and I own 42 shares. Do the math, I was up. So my Microsoft was up, my Broadcom was up, and then my Microsoft was up. All three tech companies was up, so was pushing my portfolio up. And then you have my other stocks like American Express, Zoetis, Williams Sonoma, and Costco. That also has been pushing my portfolio up as well. But what's going on is that the reason why I believe so heavily into Apple is because think of Gen Z, Gen Alpha. The only competition really of Apple is Samsung. So yeah, Samsung is going to take market share. But if you do the numbers, you in dating and mate selection and everything, it's stupid. But women, they prefer Apple, and consumer discretionary, and people are going to buy Apple. People are going to buy Apple. Here's it's the little Apple AirPods and whatnot. People are going to buy AirPods. People are going to buy you know iPhones. People are going to buy iPhones. People are going to buy MacBooks and whatnot. And then also Apple is bringing it's making roughly $100 million, or I think no, they make it 100 billion with a B of free cash flow per year. And so yeah, they took a whiff on the Apple Card, whatever. Yeah, they are taking a whiff on basically the iTunes and the little whatever the little thing we call where they taking our money and whatnot, the Apple services and whatnot, and then they have issues with over iHeart, whatever, across season in Europe. But I believe in Apple. So next week I'm going to put $250 into Apple, and then next month I'm going to buy more while it's down. I wish I would have had the money to put it into while it was down a couple of days ago when it was at 169. As you see right now, it's up at $171, and it's up 1% already. And so if you don't catch these deals, it's like going on sale, buying beef, chicken, products, but it's stocks. So Apple is on sale. Other companies, I would say probably not so much, but today's it's pretty much a red day. And so as you see, I was close to 55,000, and live you see the Dow is down, the S&P 500 is down, and the Nasdaq is down. So overall, for the month of February, I made passive income of roughly $40, which is not a lot of money. My biggest month, which you'll see as a snapshot, is March, and so we'll go through March. My dividend income. We'll go through my stock buys, because as you see, I'm going to be dumping $2,000 into the market, and then also I'll go next month through my other portfolios, because I made a lot of changes in my uh, other portfolios as well, and you'll see that a lot of my other portfolios has had a big jump as well. So hopefully you guys enjoyed my video of everything that I went through in regards to all of my dividend income, all of my new stock buys, and then also just to see just the consistency of me just going through just new stocks. And my next video that I plan on doing some research on and also presenting is a semiconductor called SMH, and then also another semiconductor ETF called SOCQ. And so I'll go into more detail the semiconductors and why I believe it's the new gold. And hopefully you guys do your research, and if you like it, hopefully you guys participate as I'm participating in as well. So hopefully you guys like this video, like and subscribe to my channel. It is me, the Millennial Investor 1914. Holla at your boy, holla at your boy, holla at your boy. Hey, you guys enjoy your weekend. Peace.